Good evening. I'm Judy Martin. Here's the latest at 7 o'clock. Another dismal day on Wall Street. At the end of the session, the Dow had lost nearly 450 points. Apparently, the government's $85 billion bailout of AIG did not calm investor fears. This disturbing message posted on 3 Village School District website. School officials say a man has approached at least 3 kids at bus stops in South Setauket and Center Reach during the last week. Anyone with information about these incidents is asked to call Suffolk County Crime Stoppers at 1-800-220-TIPS. And new concerns about the Sheriff's Department now patrolling the LIE and Sunrise Highway in Suffolk. Some fire department officials are concerned that deputies might not have the experience or training to handle emergencies. The Sheriff's Office says there is no safety issue at all. Here's a quick look at the forecast now. In for another stretch of nice weather for September. Tonight, mostly clear and cool. Low temps between 51 and 57 degrees. On Thursday, we'll have mostly sunny skies. Cool temps ranging between 70 and 75. The dry weather will continue throughout the weekend. And that is the latest. I'm Judy Martin. Let's head now back to the studio with Lee Tyrell for Long Island Talks. Lee.
All right, Judy, thanks. The federal government takes over insurance giant AIG, and Wall Street takes another big hit. It's the question everybody's asking. How secure is your money? 516-393-1800 is the number. Long Island Talk starts right now. Another ugly day on Wall Street. The Dow dropping close to 450 points. Hello, everyone. Welcome to Long Island Talks, the show that lets you weigh in on the big stories of the day. I'm Lee Tyrell. Federal government once again moving to try to shore up the faltering economy. This time, they step in to rescue insurance giant AIG. So what does this all mean for you and your savings? Is all that money safe? News 12 Long Island, Scott Feldman takes a look.
Tony Carbone from Syosset just got back from his local bank.
I walked in, everybody says, "Where you been?" I said, "Well, I'm just coming to check my money, make sure it's still there."
That's how a lot of us are feeling these days, but business school professor Joel Evans says now is not the time to panic.
They should hang tight, hang tough.
Even though Lehman Brothers filed for Chapter 11 bankruptcy, its brokerage unit is still in business. So if you had an account with Lehman, your money up to $500,000 is protected by the Securities Investor Protection Corporation. The same goes for brokerage customers of Merrill Lynch that was just acquired by Bank of America. And what about your money in the bank? That's safe too, as long as your deposits don't exceed federal deposit insurance limits. $100,000 for an individual account, $200,000 for a joint account, $250,000 for IRAs invested in insured deposits. Still, for some Long Islanders like Tony Carbone, his philosophy is better totally safe than sorry. He's thinking about putting his money in government bonds.
I figure the government is about the only safest thing around now because they're bailing everybody out.
Scott Feldman, News 12, Long Island.
516-393-1800 is the number. litalks@news12.com is the email. The man who has agreed to take on some of your questions and comments. Joining me tonight in the studio is financial analyst Jan ten Haagen. And Jan has an office in Huntington. And Jan, thank you very much for coming in. I know it's been a busy couple of days for you, probably, huh?
Been a little busy.
I know that the first thing I've heard every analyst and every economist say right now is don't panic. Okay,
Absolutely.
Don't panic. But that being said, is this one of the worst markets we've seen in a long time?
In a long time,
Yeah.
yes. But if you look back at 87, it was 31% drop in 3 days. We had 4.1% today. We're down about 25 for the year. So it's really not even close, and it's been almost a year.
The difference here, though, is the companies that we're seeing go under. Lehman Brothers, AIG, Merrill Lynch, you know, companies that we always thought were the cornerstones of finance in this country.
It's greed. They just extended and extended far too much, and that's all caught up with them.
Because there wasn't enough government regulation?
Probably not enough government regulation in the right places, but the subprimes were just rampant, and there was no control whatsoever. People were getting mortgages with no credit check. You want money? Here you go.
Here you go.
It's crazy.
Yeah, you're making $40,000 a year, but you want to buy an $800,000 house. Here you go, no
Not
problem.
a problem, yeah.
So you, like everybody else, all goes back to the subprime crisis.
That's where it started for this time, yes. Yeah.
Do you agree with the government's stepping in to help AIG?
I think if
Right move?
if they hadn't done it, we'd be far worse shape, because it's such a huge company. I don't know how many billions of dollars are there, but it's really a loan. It's not like they're just bailing it out.
It's not like they're just
it's
bailing
not like
it out.
Freddie and
Fannie Mae, yeah.
and Fannie
yeah.
Mae. This one, it's a loan, and they have to pay it back within 24 months, and there's some control over the top management. So it's a little bit different.
So a good move, though. You think it will help the economy in the long run?
If it hadn't been done, it would be far worse.
Far worse than it is
Yeah.
now. So why not Lehman Brothers?
Well, Lehman Brothers was going back and forth, and it was like Bear Stearns. Why bail that one out?
Right, exactly.
It's not that critical to the economy of this country or the world, whereas AGI is. It's just so spread across the world.
And
It's a
part
major
of,
problem.
and I've heard of a lot of economists and analysts talk about, part of doing this right is letting some companies fail. That's the only way the economy is going to help balance itself out.
Absolutely, yes.
So let me ask you the basic question then now. Is our money safe?
Depends where it is. It depends where it is.
All right, where is it not safe?
If you're in a bank and you've got more than, as was said before, the 100,000, the 200,000, 250,000, you have a problem. So even if you're going to put 100,000, I wouldn't. I'd put 95 in, because your interest is going to kick in 6 months and put it over 100.
Put it over 100,000,
Right.
yeah.
And there are a lot of people that are running from the market, which I think is wrong, and running to the bank, and they're just dumping it in there. And it's all of your assets in the bank, not just your IRA is 100 and something else is 100. It's the total of the amount you have.
Oh,
It's
all
going to
right.
create the
Yeah,
problem.
that's a good point.
Yeah.
Where is your money safe then? Where is it safe these days?
I mean, government issue, AAA corporate bonds for the most part, as long as they are AAA. And for the moment, those that say it are.
Yeah. Credit rating companies have been very busy over the last couple of days changing some ratings. I heard a lot of people today were deciding to start investing in gold. Gold market was pretty busy.
Which means to me we're really close to the bottom of this bear market. My brother bought gold, I don't know, back in the 70s and went to 1,000, and he still held on to it. Now it went to 850 today.
Wow. Okay.
It's not the standard. Russia dumped gold way back when, so it's not as much of an indicator as it used to be.
So you think still people have a lot of confidence in the market?
I think that those that are properly educated and know about the market long term, and that's the key to the market.
Yeah.
If you can't put your money in the market for more than 3 years, don't go there.
Don't go there.
Don't go
Okay,
there.
so 3 years. If you need the money in
Minimum.
less, if you need in minimum, if you need the money in 3 years
Right.
or less, don't stay away from the market.
Absolutely.
All right.
Absolutely.
We got a lot of calls coming in now, and I want to start some of our viewers. We go to Scotty in Syosset, who's got a question. Welcome, Scotty.
How are you?
Very well, thank you. What's your question?
My question goes to, along the lines of what we were just talking about, the 3 years. Would this be a good time for younger people who don't necessarily have money in the market to go and put it in? That we're at the bottom and we might see a resurgence, and it might be a good time to get money in the market as opposed to people making a run and taking money out.
Okay. What do you think, Jan?
I think if you're a younger person, you've got years and years to go before you retire, unless you win lottery.
Yeah. Lucky for
and-
you, if that's the case.
So the whole key to investing, I think, is dollar cost averaging. Putting in the same dollar amount month after month after month. If the price is a little higher, you buy less shares. A little lower, you buy more shares. And net over time, you end up with more assets.
And if you're younger,
So-
you can take more risks, certainly.
Absolutely, yes.
But you might not have as much money to put in the market. That's the big question.
That's why
do I
they-
even bother if I don't really have that much money to put in the market?
Well, I get people all the time, oh, I must need $5,000 or $10,000.
Right, that's exactly what a lot of people think.
That's wrong, because you're going into a bank or savings CD at 1.5%. At 2.5%, it's going to take you 28.8 years to double your money. If you're younger, you've got to be in the market. And even if you're at retirement, you've got to be in the market, because you retire at 55, 60, 65.
Or the way things are going now, 72, 77, 79.
Well, you might have to extend a year or two.
Just a little bit, yeah.
But your life expectancy is still going to be another 25, 30 years or more.
Right.
So you've got to be in the market, because that's the only place that's giving you a truly big return over time.
And as bad as the market gets, sometimes history has shown us over the years that it always winds up stabilizing.
The market always comes back, always has. I mean, the basic economy of the United States, most corporations, if they're not financials, are pretty solid, and they've got a lot of money on the side. They're just not ready to put it in the market.
All right, so what do you take advantage of right now in this market?
I wouldn't take advantage of anything
No?
right this minute.
Okay,
no.
right this minute.
I think.
All right, say in the month to come.
In the next months to come,
Or in the months to come.
I would stay away from financials because they're gonna be shaken out for a very, very long time.
How long do you think?
Well into '09, if not
Yeah?
later.
Okay.
Yeah, financials is just not the place to be unless you're a day trader. And if you remember back in the '90s, most of those day traders are asking if you want to supersize today. They're not around.
Yeah,
So,
good point. All right, so in the 6 months to come, what do you take advantage of?
I would look at tech.
Okay.
I think I'd look at tech, energy, but I'd look more at pipeline
Okay.
necessarily because you got to get the fuel from here to there.
Right.
So they're going to constantly be making money.
Okay. Healthcare?
I don't really like it because
Okay.
most of the big companies don't have the pipeline of new products coming in.
All right.
So maybe, and I don't like to tout specific stocks, but the Amgens, the Genentechs, the ones that are the creators,
Right.
rather than just the ones that are, passing the aspirin and other things to you, because there's nothing in the pipeline. There are no new drugs that are really exciting at this point.
All right, so then in addition to staying away from the financials, anything else?
Not really.
Okay.
I would go towards large cap companies.
Oh, yeah, large cap
Yeah.
companies are always the most secure.
They're the
no
ones to
doubt.
run to in
Right.
times of crisis. Yeah.
And what about bonds?
Bonds are good, but I'd stay very, very short term at this point, and I would stay with only quality.
Are the ratio to stocks to bonds in your portfolio still really dependent, even with a market like this, on how old you are and how far away you are from retirement?
Yes.
Yeah?
Yeah, because whether it's 20% because I'm in my 70s or 80s and I
Right.
just need income
Right.
at this stage, or if I'm in my 20s and I've got 80% in the market and 20% in fixed income, that's where the bang for the buck is going to be. You've
Sad
gotta
part
be
of
there.
this, though, is that some people who were not that far away from retirement just lost almost all of their retirement savings, depending on how they were, especially if they weren't diversified.
If they weren't diversified, and shame on the people that were giving them the advice.
Yeah, boy, just never, especially when it comes to this type of money, don't put all your eggs in one basket. That is
Never.
for sure, and this is the one thing that certainly teaches us that. All right, we're discussing you and your money. What should you do with it in these frightening economic times? Jan's going to answer some more questions for us. 516-393-1800 is the number. More calls when we come back.